And I've proven to you over time that crypto outperforms the increase of the Fed balance sheet. And only two assets in the world do over time. One is technology, one is crypto, and crypto beats them all. But the point being is this is the time, the generational opportunity to buy into all of these themes. Usually it's like 10, 20, 30, 50x from here, depending what you have. You know, is the internet worth more than gold? Yes, simple as that. And that's basically the argument here. We all know that there are some massive issues with the world economy today, particularly the Western economies. And they're dragged down by debt, aging demographics, broken political system, broken geopolitics, and a very complicated world. What I'm going to talk about today is how to unfuck some of this. Where are the opportunities that we can invest? It's particularly important for younger people. Well, it's important for everybody, but the young have been dealt a set of cards almost unprecedented, which is expensive markets with limited returns, and I'll come on to why that's the case. Bond yields that don't really compound into anything, property prices that are unaffordable, and a jobs market that feels tight now, but it's very difficult with technology coming and so many people in the labour force, the baby boomers, plus the millennials, and now Gen Z. And I've identified three key trends that I think will help unfuck your future. One is the exponential age. This is the investing in disruptive technology that is all coming together at a nexus. And I'll talk about the exponential age in more detail. But this is a moment in time human history has never lived through. This is the fastest change of technology in all human history, and it's all interconnected and all happening at the same time. This is going to solve our productivity issues. It will solve for the lack of population, but we have to get there first, and we're not there yet. The next one, digital assets. Well, digital assets solve two things here. One is the issue with debt and the broken financial system. And I've talked at length about why this is so important and why having a new parallel financial system we can transition across to, the Bitcoin life raft, as I called it, and the digital asset life raft, I think is incredibly important. It also solves productivity because it is a very efficient way of transferring ownership and value and brings new sources of value onto global balance sheets, such as brand, community, and other intangibles. So it can be a step change for productivity and capital itself, and also for how markets work. All of the trapped capital in T+2 settlement market all gets freed up. The trapped capital of the intermediaries in the transfer markets all gets cleaned up. And I've proven to you over time that crypto outperforms the increase of the Fed balance sheet, and only two assets in the world do over time. One is technology, one is crypto, and crypto beats them all because it's a very fast adoption of technology. Now, why I'm interested in them right now, because these are long-term trends, is because we're at the magic nexus. We're at the nexus where the cyclical trends driven by the business cycle have reached the bottom of the secular trend. And that is when things get really interesting. Because my view is the bottom is in markets, but I can be wrong. But the point being is this is the time, the generational opportunity to buy into all of these themes. So you're familiar with the Metcalfe's law effect in cryptocurrencies, but that is playing out literally across all technology at the moment. And it's going to create Reed's law, which is multiple exponential ages or multiple Metcalfe's laws added together. Everything is about to go exponential. I don't even think society can deal with this. It's going to create a huge amount of problems and a huge amount of opportunities. I can't deal with the problems. I'm not a politician, but I can deal with the opportunity. I'd rather invest in the future than ignore it, because then I'm just going to be bitter and everything will have changed and I won't have made any money. If I can make money from it, I can kind of accept the change. After that is the digital value layer. This is digital assets, stable coins, CBDCs, NFTs, community tokens, DeFi, all of the stuff that's being built on top of the digital asset networks, Bitcoin, Ethereum, Solana, Polygon, and all of that. This is how everything moves around, all value moves around in the digital age. And also it's where trusted sources come into play, stuff like digital ID. In a world where AI can make as much content as possible, we need to have some sort of digital ID, whether it's got zero knowledge proof, so nobody knows who you actually are, but you can prove you are a person, is going to become increasingly important. So the digital asset layer and the digital value layer is an important part. AI was the biggest fucking Cambrian moment I've ever witnessed in my life, and provably so because it was the fastest adoption of any new piece of technology anybody ever seen. Crypto was the fastest prior to that by a long way. But this, ChatGPT, went from 0 to 100 million users in a month or a month and a half. It is astonishing, right? People scramble to when they see something like this. Oh my God, this is so disruptive. And we will see that with AR, VR, and the metaverse in different ways. We will see it in many of the other parts. Robotics. You don't believe it yet, and then you'll see it everywhere. These Cambrian moments are going to hit us almost, I would say, on a 6-monthly to annual basis going forwards. You know, if we think about the Cambrian moment that started with crypto, and crypto's probably got a bigger Cambrian moment to come. We've just seen it with AI, and we haven't even started that one yet. So imagine where that's going to go. And then start layering on the full rollout of 5G and Starlink, and then the move to 6G, and layer on the rise of wearables and how that affects biotech and what we can do with genetic editing and how that's going to help get rid of cancer and other diseases. All of this stuff, it's not in the distance. We've known about this stuff for 20 years. It's right now. The next 10 years, and maybe even the next 5 years, are easily going to be the fastest rate of change of technology and change to society and human life. We don't even understand, and we'll talk into a lot of the downfalls of some of this stuff in due course. But I'm not worried about this. I'm trying to unfuck your future. Some of this is going to really fuck your future in 20 or 30 years' time. But we've got time to figure that out because it's unstoppable. But what we need to do is make sure we don't get disrupted. And the only way of doing that here is investing in it. I've talked about the point where this business cycle has brought prices down to the long-term trend. The easiest way to show this to you is here's the chart, the log trend of the NASDAQ. Beautiful uptrend. Here we are, 2 standard deviations oversold. So usually when you hit something like this, you're looking to accumulate here because the next phase is the continuation of the trend. You can try and argue with me that, well, technology, it's overvalued and there's inflation forever and it's going to stay low and it's going to collapse. Maybe some of that, maybe none of that. Maybe the relentless force and speed of this means you don't have any choice in a low growth world but to invest in growth itself. And it doesn't almost matter how overvalued they are. I've argued for a long time that one of the reasons why shares overall and most assets go up over time has actually been the debasement of fiat currency via the quantitative easing, which I think is debasement, and I think it changes the value of the denominator and it makes optically assets look higher. So if you devalue the purchasing power of the dollar, asset prices, scarce assets, look like they're more expensive because the dollar is worth less. People confuse this so much with the dollar itself as a fiat currency versus the yen. Everybody's doing it at the same time. The world's reserve currency is the one that matters. And when you devalue this, things that are non-scarce, like food, even to a certain extent energy and stuff like that, that doesn't actually move. What moves is things that are finite or have growth as part of the equation. Coinbase got super killed. I think it's very cheap. I think with the FTX blow up and Binance, it has a good chance of actually being a very large part of the future here. And it's very discounted. I wanted an equity that has the digital asset trend in it. I've already got that bet on anyway. And, you know, a big part of this is I have the digital asset bet. We'll come on to that in a sec. I just want people to focus on that, drop all their preconceptions aside, all the bear fest that's going on right now and say, I need to unfuck my future 10 years out. What am I going to do, Raoul? This is what I'm telling you, the best thing I can do. The other one is digital assets. I've made this super clear. I think it's the best bet in the world. I think it's much better than the exponential age bet because it's exponential in its own right. And again, cyclical turning point on a secular trend. So very quickly, there's the chart Bitcoin. There's the logarithmic uptrend, 2 standard deviations oversold. This is where you want to be buying it. So that kind of makes total sense to me. And guess what? It's cyclical because it's cyclical based on global money supply within a secular trend. So the ups and downs in that secular trend are actually driven by money supply. Makes total sense. All assets are the same. So there we go. Bitcoin, global money supply. Global money supply is turned up. Where is global money supply going to be in 6 months' time? Tighter or looser? 0.0 chance it's tighter because inflation is going to fall just mathematically. So it either stays the same or it goes looser. So what it's saying is this is the point in the cycle. Crypto actually turned first. It turned first, then exponential age stocks, then NASDAQ, and everything else came in October. But crypto came, actually ETH turned in June. Usually it's like 10, 20, 30, 50x from here, depending what you have. Bitcoin's not my bet here. I would probably choose to have Ethereum. This is Bitcoin versus the ISM in yellow. Fascinating. Every time the ISM peaks, Bitcoin peaks because it's money supply and the business cycle that's driving some of this. It also bottoms before the ISM bottoms. So in yellow or gold here is the ISM and Bitcoin log trend is there. And you can see the peaks match up perfectly. I think everybody confused it for the halving cycle. I don't think it's the halving cycle at all. I think it's actually driven by this global monetary cycle, business cycle, which is actually driven because rates got reset in 2009 at 0 everywhere globally. And everybody has to roll their rates. I think it's every 3.5 years. You get a peak in the ISM, exactly 3.5 years. And then there's a low, 6 months, 9 months later. And that is pretty much exactly cyclical too. And it's driven by the refinancing cycle. Mike Howell's talked about this, and I think his work is really important on liquidity and the refinancing cycle. But I think it's a bigger deal than most people understand. And again, I urge you to read the article I just written in Pro Macro or the really full stuff I've written in GMI. Ethereum, we start breaking above, a level there, which is about 2,000. If we break 2,000, then we've broken the whole pattern and then off we go to the races. I think that's what's playing out. Now, did we do that in one go or did we chop around? Who the hell knows? Don't really care. I've bought as much as I possibly can into the sell-off. I kept hold of all of my position. And I've got some other crypto as well, but this is my core bet. It's the easiest way of expressing the view. It's on the log trend. It's oversold. It looks like it's going up. The business cycle is turning up on a forward-looking basis. It's exactly what we need. And also, there's the chart of Ethereum versus Bitcoin. That's at one hell of a wedge. If that plays out, then we should see ETH doing 1, 2, 3, 4, 5x Bitcoin in the next run. And ETH probably won't be the best performing crypto either. I don't know. I look at the chart of Solana and it looks like it could outperform Ethereum. And could something else do? For sure. So I'm not saying what's what. I'm just saying this is where I think it is. Why? Because Ethereum is a broader basis architectural protocol of which we can build more stuff on top of. Bitcoin just doesn't do that. Is the internet worth more than gold? Yes, simple as that. And that's basically the argument here.